Good morning. It's Tuesday, April 1st. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we had many people reach out about the 1 ounce gold contract yesterday. If you haven't done so and you're interested in a starting point for futures trading, you could register for more information in the link in the description below. Looking at the Q1 in a review, well, worries about the tariffs and the economy that sent the S&P 500 and the NASDAQ composite to its worst quarter since 2022. So here we are, April 1st, new month, new quarter, new beginning. So let's kick it off. Let's check out on the stock market and see how things are going. So U.S. equities in the global stock market, they are all weaker as we're approaching that key date, April 2nd. That's when the U.S. plans to announce sweeping reciprocal tariffs that are going to be more country-based. So the S&P 500 dipping about 1/4 of a basis point right now. Details about the tariffs, including the rates, the targeted countries, they haven't been disclosed, but Trump has hinted that the EU, Japan, India, Canada, those may all be affected. So gold extending its rise and its winning streak here. Bond yields across the euro area fell as it showed that inflation eased towards the European Central Bank's target. So let's take a look at cryptocurrencies because we haven't discussed this one in a while. You got Bitcoin up about 2% right now, 84,500. You have Ethereum up at 1880, up $50, about 3% rise. So quick check on yesterday's performance leaders. You had Platinum up about 3.2%. And if you look at the daily chart on the platinum market, you can see a downward trend line. If you connect May, you connect the October high, you go into the February high, the March high, and then again, you can see that line right there, and that is your resistance point. And naturally, you got platinum futures off about $8, bumping right up into that trend line here. That's why I believe that technical analysis is a powerful tool, and I'm going to put out a new chart pack here today, and we're going to continue to build on it. You know, we're just outlining the daily charts, some key technical levels here, but we're trying to keep it as simple of a product as possible for everyone out there. So another check here on the performance leaders. Crude oil futures up 3% yesterday, and I gave you that one in the metals minute. I said that oil prices that Trump was targeting, and he really had some aggressive comments towards Russia, and that's what started to trigger the price, but the price rally was really quite delayed. He threatened penalties on Russian oil-led Indian refiners to seek alternative supplies, adding to the positive short-term outlook for prices. So despite some supply disrupting themes here, you know, the market on crude oil is probably going to find complacency somewhere because of the fact Trump will have to come in with some aggressive discussion to try and get prices back down here. That's why many of you that are working with me are most likely going to continue to trim some of these positions that we were putting on near those key support levels in the mid-60 region. So copper futures, I'm going to revisit this market a little bit more because copper did rise for the first time in 5 days. We went below that $5 mark. We rejected it. We came up a bit here. We're trapped between a range here of about $5.13 down to $5, and I really feel like we're starting to define some levels here. We did see copper prices, they edged higher after China's manufacturing activity improved. The Purchaser Managers Index reached 51.2, and that's the strongest in 4 months. So looking at some of the other stronger months based on technical strength, the short, the medium, the long-term indicators, well, of course, gold and silver, those are two up there, but the 5-year note is one that is starting to pique some interest here. Now, naturally, I don't really trade the 5-year note. I focus more on the 10-year note, so that's one that I'm going to start to throw again on my radar. Silver, I am still just a touch bit suspicious on because of the fact that we really haven't seen that close over $35. We haven't seen it string the next day above $35 and really take off and not look back from there. You know, the price action on silver, really, it gets you excited when it starts to go up like that and it pushes to the upside, but you really got to keep your emotions checked at the door, and you really have to look at all these different commodity markets very objectively. Some of the best clients that I've had, and I've done this over 2 decades, really are quite non-emotional about it. They get into the position, the market, if it doesn't react, they get out of it, and that's how they keep their losses very small. And then once the market breaks out, they sit back and they manage the position just a bit here, and that's how they let those profits run. So if you'd like to have more discussion, you can always reach out to us, reach out to the trade desk here, and get some of our research where we outline some of the strategies that we're discussing in these particular markets here. So looking at the precious metals overnight, looking at some key levels, 31.41, that's going to be really your pivot number on the gold market. You don't want to see futures trade below that today because then they test 31.21 and 30.92. A lot of people sitting on the sidelines waiting to buy those dips. And when you get that type of mentality, the dips tend to be a bit shallower because people are really trying to front run and get in there. Now, the thing that I'm going to be watching specifically on the gold market is some of the details that come out about these tariffs, because of the fact that everyone's been piling into the gold market and they've been risk off in the equity markets and the outside markets, where you could get that type of setup where Trump is a little bit more relaxed on some of his verbiage that he uses on the tariffs, or maybe dialing it down just a bit. And that's where you could see gold futures have its first big kind of significant fall to an area that provides some kind of value, and you'd most likely see a relief rally in a lot of different markets out there. You get to the silver market, your pivot point's going to be 34.65. Looking at the market, that's about where it's trading right now. Like I said, silver's a bit more indecisive about which way it's going to go at the moment here. Is it going to take out and break out over 35, or is it going to settle back down here again and go into this consolidation range? You look at the gold silver ratio, it kind of supports that second one, with the gold silver ratio sitting at about 91-1. So big jump up here, but gold futures, they are at this record start of the quarter. You did have Morgan Stanley. They upgraded their outlook, saying it could reach 3,400. We've seen most of the banks and most of the analysts come out there. Now, this isn't a year-end target for a lot of these different banks. What they're saying is that they believe that prices are going to reach this pinnacle climax that could be in this quarter or early into next year, where we reach these 3,500 or these lofty projections. And then we kind of settle back down as the Fed finds its footing on how it wants to handle interest rates and things like that, and how different countries respond and how the economy responds to these particular tariffs here. So gold did put up its best quarter since 1986. And if you look at the holdings of the exchange-backed funds, they climbed more than 6% in 2025. That's following 4 years of net outflows. And now it's at its highest since September of 2023. So we always check in on the ETF flows, because like I said, that's one of the most important things right now, not necessarily where the Fed's at. That's going to be later in this quarter where we'll start to see, and really next month when the Fed has its meeting, where it's the first discussion about a first interest rate cut here in this next cycle into this year. But exchange traded funds, they had 126,000 true ounces of gold holdings in the last trading session, and it's your third straight day of growth. The ETFs, they also added 940,000 ounces of silver in the last trading session here. So you look at year to date, gold up 6%, silver up about 0.5%. But unfortunately, the gold-silver ratio at 91-1. So some key events here that we're going to look at today. We're going to have some S&P Global U.S. manufacturing PMI data, construction spending, JOLTS job openings. That's one that I always watch. The ISM manufacturing. You'll have the Dallas Fed services activity and the Wards vehicle sales. Those are kind of lower tier ones. You're going to have Richmond Fed President Tom Barkin. He's going to speak here today, and then you got a 6-week bill auction here. So not really anything out there as far as the auction calendar is concerned. You get into the Fed calendar. It's going to be on the 4th when you get Chairman Jerome Powell. He's going to talk about the economic outlook, and you also have Chris Waller. So a lot to unpack here, a lot of things going on. If you haven't done so, like I said, you can register for the chart pack. I'm going to update that here probably after the European close. I'm trying to dial in exactly when I'm going to do it and on a consistent basis. Generally, my thought process right now is kind of, if anything meaningful happens on the charts, I've been sending those out here, but it's going to get into a regime where it's going to be like a Monday, Wednesday, Friday type deal. And then we're also considering sending out the pivot points that we outline here, that we use an algorithm to, as a separate email as well. So if you get the chart pack, why not trade it with the pivots here? So if you got any questions, reach out to us. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.